Hi there and welcome back to Dukascopy TV. I'm Ben Jones. It's the final day of the trading week, so it's time for the third and final edition of forecasts for this week. Joining me on the line to share his predictions for the euro-dollar pair is Martin Enlund from Handelsbanken Capital Markets. So Martin, 1 month on from now, you see this pair going slightly up to 1.40. What makes you think this?
We've been fairly positive, the euro, throughout the year, and we basically expect April HICP to bounce solidly, and that some of the deflation worries that are out there will subside. So no ECB action in the near term, as inflation will bounce, and that should underpin the euro.
Now, following that, you see the uptrend continuing in 3 months' time, reaching 141. Why is this?
The same underlying argument applies to our 3-month forecast of 141, where we expect the ECB basically to stay put as inflation starts to rise a little, while at the same time financial markets continue to bet on the ongoing normalization of the euro area, which also underpins the euro. So we don't see much action from the ECB in the near term, and that's why we think euro dollar will head higher. That's the way most pain lie, we think.
And finally, 12 months on from now, you're extremely bearish on this pair. What gives you this stance?
The 12-month forecast look a bit aggressive for most of those people who look at it, but we basically expect that eventually the problems in the euro will come home to roost, or as you say, and we expect the ECB to eventually launch more stimulus within the 9 to 12 month horizon, that the structural problems will become more evident, while at the same time the Fed actually is more or less forced to hike rates to combat sudden inflationary signs in the U.S. economy. So the long-term play is mostly central bank driven, but also driven by signs of renewed tension within the euro system.
Martin, thank you very much for talking to us today. That's all from me for this edition of Forecasts. Join us again next week though, as we have plenty more updates and exclusive interviews for you. Bye for now.